Hey, what's up, YouTube fam? Today, we have an exciting video for all you finance enthusiasts out there. We're diving deep into the world of stocks and taking a closer look at a company called Polaris. If you're into investing or just curious about financials, you've come to the right place. Buckle up and get ready for a wild ride. Alright, let's start by breaking down some key figures of Polaris. These numbers will give us a clearer picture of the company's financial health and potential for growth. So, here we go. First up, we have the PER TTM, which stands for Price-to-Earnings Ratio trailing 12 months. Polaris has a PER TTM of 10.80, indicating that investors are willing to pay 10.80 times the company's earnings for its stock. Next, we have the PER FWD, which stands for Price-to-Earnings Ratio Forward. Polaris has a PER FWD of 11.14, suggesting that investors have positive expectations for the company's future earnings. Now, let's talk about the PG ratio. The PG ratio of Polaris is 0.72, which is calculated by dividing the PER by the expected growth rate. A PG ratio below 1 indicates that the stock may be undervalued relative to its growth prospects. Moving on, we have return on equity. Polaris boasts an impressive ROE of 45.2%. ROE measures how effectively a company generates profits from shareholders' investments, and a higher ROE signifies better performance. Another important metric is return on assets, and Polaris has a solid ROA of 9.4%. This indicates the company's ability to generate profits from its assets. Let's talk about earnings per share. Polaris has an EPS of $10.85, which represents the company's profitability on a per-share basis. Looking ahead, Polaris is expected to experience a growth rate of 15% in its EPS over the next 5 years. This indicates positive prospects for the company's future earnings. For those interested in dividends, Polaris offers a dividend yield of 2.22%. This means that shareholders receive a return on their investment in the form of periodic dividend payments. In the case of Polaris, they have gone from paying $1.68 annually in 2013 to $2.56 in 2022, which represents a slight increase of 50% over the last 10 years. Continuing, Polaris maintains a healthy operating margin of 9.6%. The operating margin is a measure of how much profit a company makes for each dollar of revenue generated after accounting for operating expenses. Now, let's discuss the profit margin. Polaris has a profit margin of 5.5%, which represents the percentage of revenue that the company retains as profit after all expenses are deducted. Over the past 5 years, Polaris has demonstrated a regular growth pattern in its profits and income. This consistency could be an encouraging sign for investors. Looking at the stock's performance, Polaris has delivered an average price return of 19.01% over the last 52 weeks. This means that if you had invested in Polaris a year ago, you would have seen a 19.01% return on your investment. Lastly, we have the market capitalization of Polaris, which currently stands at a whopping $6.65 billion. Market cap is calculated by multiplying the company's stock price by the number of outstanding shares, giving us a sense of the company's overall value. Phew! That was a lot of information. But now you're equipped with a better understanding of Polaris and its financial performance. Keep in mind that investing involves risks, and it's always a good idea to do your own research and consult with a financial advisor before making any investment decisions. Alright, fam, that wraps up our deep dive into Polaris. I hope you found this video informative and insightful. If you enjoyed it, give us a thumbs up, hit that subscribe button, and don't forget to turn on the notification bell so you never miss an update from our channel. Until next time.